other concept is variance calculation. We will talk about variance. Okay. What do you mean by variance? So variance is nothing but the difference between the plan and actual cost. Okay. Generally, in product costing, we will have three costs. Okay. One is standard cost. Second one is plan cost. Third is actual. Another one we have target cost that we will discuss later. Okay, standard cost. What do you mean? I mean, standard cost we have already discussed. When you are going to manufacturing a product, to determine the cost of cost of goods manufactured for that product, right, or determine the price of that product, we will do the standard cost estimation. That is standard cost. Generally, we will do at the beginning of the month. Okay. Next one is plan cost. Plan cost is generally, at the time of creating process. I mean, let's say you have estimated cost of the product, 100 euros, right? Then plan cost. Let's say you have created a production order for this material. I'm talking about FZ100 only. Okay. We got around some 3,700, right? We will keep that price only. It is a standard cost. Plan cost. When I create production order, my cost will go up or down. Like it could be 3,900, or it may get down to 3,600 something. Reason for that, okay, while doing manufacturing, for one product they will maintain different kind of bombs and routings. Okay, why they will maintain like that? Sometimes what happens? Let's say initially their standard bomb, let's say wheels, right? I'm just giving an example here. Wheels. We have different kind of brands of wheels, right? Or else forget about wheels. I mean, generally they come up with. Okay, take a wheels as an example. So we have different kind of wheels. Like we have MRF, we have some Bridgestone, right? TVS, something like that. There are different kind of wheels are there. Of course, I mean the cars are pretty much, they'll decide, I mean, with what wheel we have to go. Let's assume at the time of manufacturing, they thought of go with MRF. Okay, I mean that their standard is like MRF. That time, due to less stock availability, they'll not only, I mean, always any manufacturer, right? They'll not rely on one single vendor. Okay, they rely on multiple vendors for any reasons. I mean, different reasons. Let's say that time MRF is not available. Then what they do? They go for Bridgestone or some other brand tires. Okay, I mean, they may wait also, but that is a different story to till that get, I mean, the stock. But yeah, I'm giving an example, hypothetical example, not hypothetical. It will be real in some other business cases. Okay, that particular component is not available, so they'll substitute another component. Okay, with the same functionality, but the price could be different. Okay, either the price of that component might, increase. I mean, maybe less or low. Slight deviation will be there. So the plan cost will become 3,900. Okay. This is plan cost. And at the time of creation of process of production order also, system will calculate the price. I mean, what are all the raw materials we are using, how many operations we are using, how many hours we are using. All these kind of information we will get. I mean, during the production order creation, system will flash you the plan cost. Okay, by manufacturing these many quantities of cars, you are going to expect this is the planned cost for making these products. Such kind of details will give you. That's at the time of I'm telling you again, at the time of production order creation, system will calculate the plan cost. Okay, it's based on the BOM or routing which they use for calculating production order. See, for standard cost estimation, they may use a different BOM and routing. For production order manufacturing, I mean, for the real manufacturing, they will go with different BOM and routing, because in general, in the real-time product costing, for one product, at least they will have 4 to 5 kind of BOMs and routings. Okay. They create each BOM and routing. They create together. They call it as production version. They call it as production version one, version two, version three, version four. Like that, they will have minimum 4 or 5 kind of BOMs and routings are available. Out of that, we will use one for standard cost estimation. Okay, sometimes we can use combination of two, but in general, we will go with the most accurate one for the standard cost estimation. Okay, but while doing manufacturing, production people, they may take any other, I mean, as per their availability or as per their, that time, maybe lot size, or maybe due to some different unavailability of raw materials or some other, machine breakdown. Let's say they have some 3-4 production lines are there. Okay, one of the production line got repaired or it's went under maintenance, so then they will go for another production line, something like that. So because of that, they will maintain different BOMs and routings for one particular product manufacturing. So during the actual production, they may choose whatever they want, right? That is plan cost. Next one is actual cost. Okay. Actual cost is the real cost what we are going to incur during the manufacturing process, right? They thought, like, during the production process, they will issue goods to the production order, and they will do activity confirmation at the month end. They also run this overhead calculations and everything. Okay, once everything is happened, then we will get the actual cost. During the actual cost also, the cost might be, again, it could be 4,000 or it could be like 3,800. Okay, let's say 3,800 our cost, or maybe let's keep it as 4,000 during the actuals. Why the actual cost? The chances of actual costing is increased because there could be another, right? There are some components, there are some faulty components. They thought of using one component during, manufacturing process. What happens? They thought of, let's say, the consumables, they thought of using 2 kilo, but some of the components are not good in that particular, let's say some tools or, bolts, nuts are not fit. So they have to use additional bolts and nuts. That will increase the cost. Or else they thought of, spending 10 hours of machine, but it could went like 12 hours or labor hours also, for that matter. Additional another 1-2 hours they spent because of some kind of, misalignment or some quality inspection, damages they found during the, inspection. And again, they did some kind of, tinkering or something. Some kind of additional activities they do. Okay. Because of these factors, during the actuals, the time could vary. Okay. Or else they may use additional components in order to make the product more compatible to their requirements. So all these factors, because of that, the actual cost may increase or decrease. Sometimes, if the labor is very efficient, between us also, right? Some people are very efficient and some people are moderate and some people are low efficient. So some guys, they really do the things very quickly. So because of that also, the time matters. So because of these factors, it may increase or decrease. So during the actual production, that is actual cost. So when we calculate the variance, system will consider generally the difference between the actual and plan. Okay, or else let's talk about actual and plan. Then it will give you the variance. Okay, but in general, the real variance is what you spent and what you receive. That means, let's say, the cost of the product is 3,700, right? system will calculate the variance between these two, like 300 is the variance. Okay, because why it will calculate the real variance? You spent 4,000 euros, you use 4,000 euros or USD, but your standard cost estimation is 3,000. When you do a goods receipt from your production order, system will post a inventory with the standard price. It will not take the plan price. It will take the plan standard price. So the remaining, you spent 400, you took 3,700 as an inventory, and the remaining 300 system will consider as a variance. This variance we have to adjust to your books so that it will give you the real picture of your profit or loss, right? So you spent 4,000 but you got output of 3,700, so remaining 3,000 is like, it is a negative, right? That means negative variance is like in general it's beneficial to the company, because you thought, sorry, here it is a positive variance because you spent 4,000, you have taken only 3,700 output. So that means you spent extra cost, right? So it's a loss for you. I mean, your manufacturing process is not efficient, and you got, some loss due to inefficiency of the manufacturing process or due to some other factors. Okay. I mean, it is not the real loss or profit, but because of the manufacturing, it is inefficiency. You have some kind of, uh, loss, but it's not the real loss. But this we will adjust to the P&L account in order to match our balance sheet and what we spent and what we receive, right? In order to match both the things. So we will transfer this 300 to P&L account so that your balance sheet and P&L account, the financial statement will be in sync and you will get the right picture. Okay, we are not talking, the revenue or something, just, what we spent and what we have received. So at the end, the spent and received amounts would be same, right? And it should not be like something else. So from the finance perspective, we have to match both the things. So during, this variance, we will settle at the month end. So this will be settled to a P&L statement and COPA, P&L account, and it will also transfer to COPA at the time of settlement. Yeah, I will show you the same example in the system also, with the values and all the figures. So variance configuration is very simple, I would say. Define variance key. So variance key 0001, if you want, you can copy this variance key to our controlling. You can create your own variance key, like Z00001. Save it. Okay. Define default variance keys for plants. So what generally we need to do, we need to assign our variance key to all our production plants. Okay, so that we no need to separately assign our variance key to each and every material, because we need to assign this variance key to our material, so that whenever you create a production order, the variance key will be passed from material master to production order. If you don't assign here, okay, here, there is a disadvantage also. So if you assign here, what happens? It will update to each and every material. Okay, the variance key is updated to even for raw material also, but variance key is not required for raw materials, right? It is required only for the products which we are going to manufacture in-house. Okay, so some people will say, no, I don't want to see variance key in raw materials. So in that case, what we have to do, we should not assign here. Rather, in the migration cockpit, or material master migration, right? During that time, you have to tell them like, if the material type is FERT or HALB, then assign variance key as so and so. You have to give this rule to them, so they will do the same thing. They'll ignore all the raw materials. Okay, so or else based on values in class or something, some based on some parameters, you have to give them a logic to update the variance key. But even though if it is updated in the raw material also, there is no harm as such, because for raw materials anyway, we are not going to calculate any variance. But sometimes business say, no. When we are not, when we are not using variance calculation, why we need to update, variance key in the material master? Likewise, we will get some kind of questions sometimes. Yeah, but either you default here or else you have to take care in the metal master data migration. Okay. Check variants. So we have different kind of variance categories are there. Like we have scrap variance, input price variance, resource usage variance, input quantity variance, remaining input variance, lot size variance, output price variance, and mixed price variance. So this total in this example only, right? We got variance as 300. This 300 includes different kind of categories. I mean, system will bifurcate this 300 variance categories into multiple categories. Like, let's say input price variance. I mean, generally what we get input price variance. Okay. Input price variance means, let's say, I mean, at the time of standard cost estimation, okay, your standard price of raw material is 100 euros. But during the actual production, that raw material cost might be increased. Okay. Let's say, I mean, you are doing standard cost, you're not doing standard cost estimation every month, and you are using or moving average. Let's say, I mean, you're doing standard cost estimation every month, but again, I mean, I'm giving different kind of scenarios. If you are using material ledger, standard cost estimation we will not do for raw materials. Sometimes some people will also do raw materials also, they do standard cost estimation. In that case, what happens, your standard cost estimation and your actual cost also will same. But some people, what they follow, they do standard cost estimation yearly once or quarterly once. Okay, depend upon nature of their raw materials. For example, some raw materials, the price is changes every day, right? For example, metals like gold, platinum, and aluminum, these kind of metals, those prices will vary every day, even for that matter, fuel, all these things. So it depends upon that, the type of material they do. I mean, decide, okay, we will do standard cost estimation every month. Some people will do standard cost estimation quarterly. For example, now our current, client is wood business. Okay. So they do they'll not do standard cost estimation every month. Okay, they do quarterly because the wood cost is like they have a forest. Okay, it will not be like no one can decide. Okay, what is the price of this, something like that. So they think that, I mean, our prices are standard and we will not change it for next couple of 4 years. But in the process of food, I mean, they use other chemicals, right, to get the pulp and paper and everything. But the chemical cost may vary. Okay. So because of that, I mean, in your standard price, the raw material price might be different, while actual costing, it may increase. I mean, let's say, I mean, while doing the standard cost estimation, it is 100 euros, but while doing the real manufacturing process, it may go down to 90 or it may go up 100. Because of that, we will get some input price variance, right? Input quantity variance. Okay, next one. Input quantity variance means, let's say you thought, we can use only 2 kg of consumables in our example. Let's say during actual manufacturing we have used only 1.5 kilo or maybe 2.5 kilo. Then it may increase or decrease the price of, right? Decrease the price. That is quantity. Or else the hours also, right? I mean, we thought like, okay, let's machine 10 hours, but we have used 12 hours of machine. So that also because of input quantity variance. Okay. And scrap variance. This is another thing, is like, I mean, cars and all, we may not get scrap, but some other, especially aluminum, this cuttings, bendings, all those kind of processes where we will get a lot of scraps. Okay. They'll maintain certain percentage of scrap in order to, let's say, I mean, if they want to maintain 100 kg of some material, okay, they'll maintain 1100 so that they will get 100 kilo. Okay, especially these food chemicals, these kind of places, they'll maintain the scraps and all, because, I mean, they'll get only if they expect, let's say, I mean, our food process, let's say curd, milk as an industry, right? I mean, they expect 100 liter of curd or maybe 100 kg of curd they want to produce. But during the process, because of the spillovers and all, they may get less quantity. So in order to get the 100 quantity or maybe 1000 quantity, they will maintain production quantity as 1100, but they will take as 1000 only. Remaining 100 they'll consider as a scrap. Okay, so that is scrap variance. They'll maintain. I mean, they'll maintain the scrap percent. How much is the scrap percent? So that system will calculate. Okay, this variance is because of the scrap. Okay, and resource usage variance. I told you already. Resource variance is because of raw material substitution. Instead of A, we have used B. A price is 100 euros, B price is 110 euros. Because of this, we will get resource usage variance. Okay, substituting the materials. Okay, and remaining input variance. If system is not able to, we have some kind of variance. System not able to assign any of these variances, like input price variance, resource unit, input quantity variance, then what system does? It will allocate to a default variance category, remaining input price variance. Okay. Next is mixed price variance. Mixed price variance is basically we have also mixed costing and product costing. What the mixed costing is nothing but, let's say you are procuring raw material from different vendors. Okay, A and B. You are procuring the same material from A for 100 euros. From B, you are procuring from 120 euros because of some reasons. Okay, it could be their quality or their brand value or something. You are spending more for that. But both products you are using in your manufacturing products. If you use A price for the manufacturing process, your cost will go down. If you use B price for the manufacturing or standard cost estimation, your price will go high. In order to balance both the things, right, we will calculate the mixed price. So in costing, we have a concept mixed price. So we will create a mixing ratios for A and B. Let's say, from A we bought 100 quantity, from B we bought 60 quantity. So we'll maintain the percentage. Okay, we are procuring raw materials from 40% of raw material from A, 50% of raw material from B. So system will calculate the mix price for both the raw materials. Like it will take 100 out of 100. Here take 40. Out of this 120, take 60. That means it's around 70 to something. So together you will get some 115 something. So it will close match to either the between value between 110 and 120, right? So in order to reduce the variances, we will calculate the mixed cost. Okay. So because of that, price changes, if you get any kind of variances, if you are using mixed costing, if there are any price changes because of that mixed costing, then we will get the mixed price variances. Okay. Then output price variance. Output price variance is like the standard cost estimation, right? So during the standard, you have run the standard, created the process order long back. Okay, at that time the standard cost estimation of the material is like 3,700. But after 4 months, you have delivered your product. You have taken output from the process order or production order. That time the standard cost of the product got increased to 4,000. That means 3,000 variance is there because of your output price. Okay. So that is also variance. That is output price variance. And lot size variance. Because of sometimes in costing, we will maintain the costing, lot size, and everything. These lot size variances basically we will get in the food industry again. Instead of 100 quantity we have planned, but we have delivered only 95 quantity, or maybe sometimes you will get more also, like 105 quantity or 101 quantity also sometimes. So because of the output quantity deviation, you will get lot size variance. Okay. So we will see all these variances in the system, but we don't have any formula or any information unless, in the SAP help, we need to get some kind of bookish information for all these variances. Okay. If somebody asks, what do you mean by usage variance? Likewise, we have some information, but we don't have anything. If you see, you find one variance in the system. If you ask me what is the formula behind it, there is no answer from me. Even there is no answer from SAP also. So this is what all what we need to do. Okay, different categories. Okay, we will get to know from the SAP help or maybe some kind of notes. The SAP explained what I mean how system will calculate the variances, but we cannot really see that in the system. You can see only the figures, but what formulas they are added in the backend, we don't know, and we cannot see it as well. Okay, here we no need to anything. It's a standard one, 001. We use the same thing. But generally, I mean, many people doesn't use it. It's really doesn't matter for them. I mean, what kind of variance it is. And also there is another problem when you are using material ledger with actual costing. Okay. Um, SAP itself suggests to don't use these categories because your actual costing itself, it will revalute. I mean, it will post double postings to COPA that I will tell you once again during material ledger why SAP now suggesting to use those variance categories when you are using what do you say material ledger with actual costing because it will post double effect in the COPA. That's what I mean. SAP suggests when you go with probably for your analysis purpose you can do it, but don't post it to COPA with different categories when you are using material ledger with actual costing as COGS revaluation. Because of during your COGS revaluation also variance will be revaluated, and again you are posting these variances to different categories into COPA, then there will be double impact on the COPA, so your results will go wrong. That's what I mean. We will only post the lump sum value to COPA to a separate account. The ML remaining things, I mean, ML will take care. I will show you one example also how ML, revaluate the variances already posted variances. Okay, that I will show during COPA and ML integration. So time being, I mean, remember we should not use variance categories postings to COPA when you are using ML with actual costing. Define target cost versions. Controlling, product cost controlling, cost object controlling, product cost by order, period and closing, variance calculation, define target cost version. As you can just copy this one. Okay, IN10. So basically what we are doing, we are assigning that variant to our, controlling area. On what cost? I mean, see here, the actual cost and the current standard cost. On these basis, we are going to calculate the target costs. Okay, that's what I mean. How system will calculate the target cost? Actual cost multiply. I mean, the actual cost and standard cost. The standard cost is see the target cost definition. In the target cost, we are selecting current standard cost estimation. So this is the SAP default setup, and just we have to create one with our controlling area. So during the target cost calculation, system will consider actual cost and target cost. I mean, target in the sense, I mean, it includes the target cost. It will calculate the standard cost, I mean, the variance. Okay. So variance is completed. Now settlement. Next one is settlement. Okay. Now create settlement profile. So standard one is PP01. Okay. Production order settlement. Just copy that. Make it as something ZP01. So earlier also we have created one settlement for internal orders. So here also same thing, like we are creating one settlement profile for production order purpose. Okay. So I told you already, in accounting based COPA, we will not use this PA transfer structure anymore. Okay. In costing based COPA, we used to use this PA transfer structure used because where we have we don't have a direct relation between cost elements and value fields. In accounting based COPA, we will not use the value fields anymore. We are just using our GL accounts as COPA fields. So we don't need to do anything. Okay. So just allocation structure, time being, keep it A1. We will see later. And if you see here, variance to costing based COPA, this we will not check because we are not using costing based COPA. If you are using costing based COPA, then you have to give allocation structure, PA transfer structure here, and you have to set this indicator. But we are not using accounting based COPA, and we are using only we are not using costing based COPA. We are using only accounting based COPA. So hence this is not required and this is also not required. All are same. Just save it. Now this settlement profile we need to assign to what do you say, the production order type. We have to assign the settlement profile. Actually, we need to link, this settlement profile in the order type. I'm just checking where it is. Product cost control. So ours is YBM5, right? We thought we use YBM5. This one, PJH, yeah. PJH. So here, if you see here, this, let me close this. Change OBM5. So here we need to assign the settlement profile. What we have created, our ZP01, we need to assign here so that when we are creating the process order, our settlement profile will be get updated to this process order type. Not process order, production order. Sorry, we are using process order, so I'm always saying process order. So settlement profile we have assigned here to the production order type, so that whenever we create a production order, then system will automatically update this production order in the master data. Compare the number in digit order. Okay. So we have created the settlement profile and we have assigned the settlement profile to order types. Okay. Now we are ready with all the configuration related to cost object controlling. What we have done, just a quick recap. We have created two costing variants, that is ZPP1 and ZPP2. We have assigned the costing variants to order type. This is also integration. This is the COPP integration, you can say. we will assign the costing variant plan and actual to order types. Okay. And also we assigned our result analysis key, what we used for work in progress, that we assign to order types. Okay. Where we have assigned here, manufacturing orders. If you go here, plant IN10, YBM5. Here we have assigned our costing variants, result analysis key we have assigned here. Okay. And settlement profile also we have assigned. So what we have assigned to order types, we have assigned settlement profile to order type, we have assigned RAK to RF of order type, and also we have assigned costing variants to RA order type. So this is the integration between CO and PP. And variance key we have created, but variance key we will not assign to order types. Rather, we assign to the plant, or we need to assign on the material master. For example, if I go to material master M02 FC100 IN10 costing 2 tab, sorry, costing 1 tab. Here the variance key. Okay, here we need to assign our variance key Z01. If you default to the plant, whenever you create the material master, it will get updated automatically to the material master. Okay. Now let's create one processor, one production order. Okay. COR1, sorry, CO01. FZ100 production plant IN10 order type YB35 order, oh, sorry, YBM5, right? Okay. Now let's create 5 cars. I mean, let's assume we are manufacturing 5 cars. Okay. Current date. No production version found. Okay. So we need to create a production version. That is nothing but to link the BOM and routing. So C224, C224. Okay. Okay, production version we need to create for this particular material. Let's say Z001. Here we need to give validity date from and validity date to. Let's give start of the period. I'll just give the beginning of the period or something. Validity, you can give anything. Generally, it will be 999. Okay, just I have given it till August. Okay, here costing lot size we need to give. Like I mean this is all PP related to master data. We don't need to worry much about it, but we should know about it. Here, let's say, I told you, right, for the same material we can have multiple production versions. Like you can have here Z002. If the lot size is from 1 to 100, take this version. If lot size is 200 to 1000, then take second production version, something like that. They'll create multiple versions also with validity dates and etc., and also alternative bombs, everything. Okay. Here we need to enter the recipe group. It's one second. So this is the group. We have created the routing, right? That group we have to assign here. Enter a task list type. Okay. Consistency check. Okay. Okay. So we have created a production version by using this group. Let's see. Now create CO01. Okay. 5 quantity. Current date. Okay. Scheduling carried out. Now, if you go to calculate cost, messages using cost. Okay. Go to cost calculation. So consumption account cannot be determined. There is some OBYC issue. Let's see what it is. So ZBB 7920. Okay, they're saying, this is not maintained. ZBB then we have to maintain. OBYC. This ZBB is required, to goods receipt. When we do the goods receipt from the production order, right? System will post an entry that is finished goods inventory debit and COGM credit. So that entry will be taken. I mean, system will pick the GL account from here, GBB EAUF, GBB EAUF. This one. We will use this one only. Account. Now calculate again. Okay. Let's save it. We will see. So this order we have created. Go to change mode. Now calculate cost. Still we are getting some messages. Go to log cost calculation. GBBAF 7920. Oh, sorry. I maintain a different account. So 7920. Okay. Now let's see. CO02. Calculate cost. Still it is giving some messages. Go to logs cost calculation. So for all these metals, I think, I mean, it's green only. We no need to worry unless if it is an error message, we need to bother. So no problem. Now go to cost analysis. Okay, now go here, cost trend. So if you see here, system calculated, we have created production order for 5 quantity. So it has calculated cost for all the raw material. This is good issue. This is for machine, and this is overheads. Okay, if you see here, machine time, setup time, earlier also we discussed, right? It's constant whether you create it 1 quantity or 5 quantity, it's same 25 euros because it's 5 quantity. So you can see here the total plan cost. You can also see the total plan quantity. Total plan quantity. So here you can see the total plan quantity, and you will have the total cost at the time of, do some good issue and everything. Here you will have the actual price. I mean the difference. Here you will have the actual price and you will have plan actual variance here. Okay, that's what I'm talking about, the variance during the period. Okay, if you see here, everything is fine. We are getting raw material cost here. We are getting the production cost, manufacturing cost, and the overheads. And this is the output which we are going to get. Okay. And this is the variance already we are getting. This is the plan cost. Again, I mean, the raw material cost will come from BOM. This is coming from routing. This is from the costing sheet. This is the finished product which we are going to get out of this production order. Okay. If you see the master data here, see the production version, what we have created, right? That came here. Goods receipt, nothing here, controls. So all our CO related information, you will have it here in the control tab, like plan costing variant, actual costing variant, costing sheet IN10, because it again, it will get we have assigned here, right? I mean, in the valuation variant, RAK we got. Okay. And if you go to environment header, settlement rule, just go to settlement parameters. So we got our settlement profile also to the production order. So we have assigned this to our order type. So from the order type, system brings up the settlement profile. Okay. This is the settlement receiver. See, in internal order and other orders, we have to assign the settlement category manually. Okay. Whereas in case of production order, system will automatically assign this material category as the material itself, and it will update the rule automatically. We cannot, I mean, we no need to assign this settlement rule manually. Okay. So this is SAP standard because of the settlement profile configuration. System itself, I mean, production order, it will get assigned automatically as a material category. But in internal order, if you remember, we have assigned here cost center. Okay. But in product costing, we don't need to do that because it's an automatic assignment. Okay. Now we have created the production order. Master data. This is the recipe group what we have given, right? And this is the BOM number. So this is all related to finance. I mean, production planning only. We will not create any orders or something, but we need to check whenever, I mean, they create a production order, we get the error messages. Okay. So they will let us know like, okay, we are getting this error message. Please check. Then we have to go to the logs. Then we have to check what errors. I mean, if the errors belongs to cost calculation, we have to go here. Then you have to check the error message. If there is any error message, then we have to fix that message before creating the order. Okay. This order is created, but we have not yet released. In order to release, you click on this flag. Once you release, then only you can do any kind of postings to this order. Otherwise, it will not allow any postings to this order. Just release carried out, save. So this order is saved now. So for this order now, we have to issue the goods and we have to do the activity confirmation. Then we have to calculate the work in progress WIP. Okay. Now we need to issue the materials. But before issue the materials, we need to build stock, right? Okay. So one more thing, like in S4 HANA also, there is no change in the product costing, the basic setup, right? I mean, what we have discussed so far, there is no change. Okay. Everything what we have in ECC, we have the same thing in S4 HANA also. Only thing is we have some Fury apps, for example, cost calculations, right? I mean, standard cost estimations. We have that CK11 and CK24. For that, we have a Fury app. We can use that Fury app. And also there are some reports. I mean, for cost estimations, I mean, we will get the report. We have some Fury apps for the reports. Apart from that, in the product costing area, there is no changes unless if you are using UPA, Universal Parallel Accounting, or the cloud version, right? In the cloud version, they have changes. I mean, this month end closing, we no need to perform manually. It's like event based. As and when you do the goods receipt or good issue, system will post variance or WIP to finance. So that is the change. It changes in cloud version, but on premises there is no change. I mean, as it is. But in 2023 onwards, if Universal Parallel Accounting UPA, if you use UPA, then that will be a change in the product costing. Okay. Now we need stock, right? I mean, for all these good issues and everything. Then what we have to do, we have to load some stock. Okay, initial stock. Earlier, if you remember, for initial stock upload, we used a certain transaction code like MB1C, MB1A, etc. Okay. Now all those transaction codes are obsolete in S4 HANA. For each and every goods movement, I mean, at least for all the goods movements related transactions, now we have to use MIGO only. So whether goods receipt, goods issue, stock load, cancellation, whatever you do with the goods movement, I mean, with the material, you have to use transaction code MIGO. Now you cannot use any other transaction codes. For example, if I enter MB1C, transaction MB1C is obsolete. Note, it's referring. So you have to go use only MIGO now. Okay. Here, goods receipt you have to select. Here you select other. Okay. Today's date I'm selecting. Material. What are our raw materials we see? So these are the raw material RM100. I think before that we need to do OBSC also. Let's see. Means quantity. How many quantity we need? For example, I need some 200 quantity. Where plant IN10, storage location 0001. Okay. Item okay. Just for check. Account determination for entry IN GBB, ZOB 300 not possible. Okay. So system did not find account. This is OBS setup. I told you, right? I mean, but why GBB ZOB is bringing them doubtful sort of. It should be BSX. I'm expected, but okay. GBB ZOB. Why ZOB is coming? They are using for ZOB. Yes, 60. It's 560. I think I did a mistake where this is not the moving type. Rather, we need to use 561. I believe that's the reason. 561 receipt stock. Yeah, let's see with this one. Check. GBB. Now it is correct entry. So GBB BSA, it's not there. So we need to assign BSA here. BSA 3000. Okay. This is the right moment. Now OBYC. BSA. Why BSA is not there? Okay. Yes. check. Or GBBS. Okay, we will create one GL account, initial stop upload. This is 16. Yeah, that you can create as GBBS. It's different accounts. So it's a balance sheet account. Okay, GL account type. Okay, let's create one account for the balance sheet. Ours is IN10. Okay, create account. Let's use 160. Balance sheet account. Balance sheet account. Let's say initial stock load. C06. Since it's a material account. Yeah. So I think somebody changed the field status variant, or earlier we used to use the Z01s, right? Oh, sorry. I think we are creating a wrong company code. It is showing 107. Let me close this. FS00 IN10. One and I'll create. This is balance sheet, assets, initial stock load. Okay, I have created this one. Let's assign this account in GBB, BSA, OBYC. Already we opened somewhere, OBYC. Yeah, GBB, BSA. So what I will do, I will assign without valuation class so that it will be applicable for all the valuation classes for the stock loads. 100999. Otherwise, let me put it for the value, all the valuation classes. No worries. Anyway, we are less only. This one. And we need this also. Stock, initial stock. Okay. I think it's better to assign BSX also. Okay. Otherwise, again, they will ask one more account. So 1020 balance sheet, account group, assets, RM inventory. Okay. Make an interface status group. Balance sheet, assets, RM, SFC. So SFC also we need an inventory account. Now we need FZ also. We need one inventory FZ. Copy that. I will make 30 FZ inventory. Okay. So consumables also we have created one more, right? I think, or no? We have 3000, 3003. Okay, consumables also. I think we need one more. Copy 23 consumables. Okay, so now we have created balance sheet accounts also. Let's assign BSX also. Go to here, BSX accounts. And account Y account is. So we have 3000 RM consumption, right? 3000 we used RM inventory 1020. Okay, now let's take 7920. 7920 is what? 7920 is finished product, right? So here we need to assign FZ inventory, this one. So this is all FI, MM integration. So this will be done by FI consultants, but being as from CO, consultant, we should know, all these things, what accounts they are using and what valuation class and all using, because ultimately it's again depends this particular valuation class and everything on the project also. At least in our project, the all valuation classes at least we will handle, but we will ask the finance people to assign relevant GL account for all these valuation classes. Okay, now FZ inventory, this one, this is 217920. Another one is, I think 3002 we used. 3002, what we used? 3000 consumables. Okay, 1 second. Let me check one more time all these accounts. CK13N. This is RM220. 21 is SFG. This is consumables. Okay. Okay, good. Now we have done the setup. I think BSA we need to do. Let me go one more time. BSA we have assigned all the accounts, right? So no problem. Now again, let's go to Migo again. Here is this Migo. Yeah. Check. Yeah. Now it is allowing us to post. Let's post it. Correct the customizing setting for ledgers for universal journal. What it is? Oops, something is going wrong in the ledgers. Check customizing. Okay. Accounting principle. IN10. Accounting principle gap as an ledger company code. Accounting principle IFRS and gap as an ledger. An accounting principle can be assigned to 3 levels ledger company code. If that's done. What it is saying. This is currency convert settings. You're missing company code IN10. No valuation profile assigned to COA IN10 ledger. Valuation profile. Okay, the one material ledger setup is missing, that I can understand, but currency type settings for CT11 are missing for company code IN ledger IL. But we are not using, right, that currency type. Let me go again. FINSE underscore ledger. Just bear with me because goods movements we will get a lot of errors unless all these things are in sync. Currency types. New is, let's make some changes to this one. But we have not assigned this to our company code, right? I think. Let me go the company code. 0L. Oh, we have not removed this one. What is your cancel the change? Okay. Yeah, now let's try and see where is the Migo. Okay, now we have, let's try one more time. What happens, we will see. We have removed 11. So this here movement type is 561. Initial stock load. Okay. Raw material. Okay, material is RM. Quantity is 200. Where plant and location. Item okay. Check. Post. Okay. Now the goods movement is posted. Let's see the accounting document. Document display. FI. See RM inventory 20,000 and initial stock load. Okay. So likewise, now we have to stock load for all other materials also. RM 100, we have done RM 200. Storage, sorry. This one is here. Material is quantity, some 50. Where is done? Check. Okay, this is also done. Next, SFG. SFG also, let's make some 50 quantity. Where post. Okay. RM 300 also we need to post. Quantity RM 300, what it is. External parts. Let's say some 500 kilo. Okay. Post. Now another material, RM 400 consumables. Where? What is location? Okay. Now we have stocks for all the materials. Okay. The MB55, if you go to the stock report, sorry, MB51, I believe. Yeah, MB51. Plant I'm just giving middle list. So we have stocks for all the materials. Okay. So raw material 100. I think we posted something wrong or what. RM 100 twice we have posted. Looks like, I mean, SFG we have not posted. Yes, wrongly I posted SFC 100 also. Some 25 or 30 quantity. List. Okay. Okay, now SFG also we have. Okay, now we have all the stocks. Okay. Now we can issue stocks to our order. What is our order? CO 03 180. As of now, if you so go to actuals, so actual cost is 0. As of now, nothing is there. Even target cost also no target cost. Okay, if you see here, no target cost, no actual cost. Only we have plan cost. And at this moment, if you see the order status here, we have released status. Forget about all this, but REL is the status as of now. I mean, this order is released and we have not done anything to this order at the moment. Now let's issue the goods. Migo. Again, I mean, good issue also we have to use Migo. Goods issue. These are all logistics transactions. We no need to do anything, okay? Order. You have to enter the order number here. Order RM not found or not permission goods movement order. RM 400 not found. What happened to 400? Admin components. It's did we block somewhere RM? Either the order. Oh, something wrong. Okay, I have given the order number wrong. I'm sorry. Okay, so I have selected good issue order and order number here. Let's see. Okay. Now wheels, you need to enter the storage location. For a good issue, the movement type is 261. Okay, just click item OK. This also enter storage location, item OK. Engine storage location, item OK. This also item OK. Storage location, consumables, item OK. So actually, I'm not changing any quantity. Let's try to change quantity for this consumables. Let's give 12 kg of consumables. Okay. So others have not changed anything. Everything I kept as it is. Okay. Post. So now the document is posted. Display document. Okay. Doc info. FI documents. Accounting document. If you see here, RM inventory credit, RM consumption debit. RM inventory credit, RM consumption debit. SFG also same thing, RM inventory, consumables inventory. Okay. You can see the material numbers also here. Change layout. You can see the order number. You can see the material code as well. Okay, so here you see, because I mean we use the same valuation class for all the, I mean some of the raw materials we use the same valuation class, so that's what I mean. It's doing the same thing like 520 everywhere it's passing, but wherever it is different, it's posting different GL account. Wherever the valuation class is different. Yeah, so inventory, what it is doing, it's typically reducing your inventory and it's posting raw materials to raw material cost to your process or production order. Okay. Now go to the production order report. Go to cost analysis. So actual cost is posted. So here we got 80 USD as a variance. Sorry, 180, right? So rest all same, like your plan cost and actual cost is similar, but only thing is here we have some kind of deviation since we have used extra quantity. Okay. Now let's go to the second transaction, confirmation. We will do the activity confirmation. Okay. This is also not our transaction, CO11N. Okay. You can simply enter the order number. So there are two things here. You can do the activity confirmation by each operation wise, or else you can do all together. Let's do it operation wise confirmation. Actual data. So we have for 5 quantity operation, 10. We have this many hours, standard hours. Let's increase these hours. Like this is make it as 80. I'm increasing the hours, labor hours. I'm taking another 10 hours here. Okay, I'm just assign a number range for business transaction RKL. Okay. Let's see. I mean, the confirmation is saved. CO03. Go to Cost analysis. I think looks like it's not completed. Let's see. CO11 and one more time. Order number. Actual data. Oh, it's already confirmed, but why the cost is not posted? Yeah, see if you when you click on the actual data, it's not showing anything. Okay,